Okay, ladies and gentlemen, we have some talking to do. We're going to talk about filling out the forms. We're going to start with the 1041. Now, give me a second to tell Deborah that I'll talk to her later. All right. The forms for the 1041. Now, I'm not going to just focus on the person whom I asked if they could do that. I'm going to focus on the other people here who suggested that they would like to help. We're going to start with the 1041. There are several items, several lines that we have to determine whether or not we're going to boil it down to. So, un momento. The first thing is we're going to do a simple trust. Now, again, we're going to be doing both. Now, this is your understanding. The fiduciary, you guys didn't know who the fiduciary was because we hadn't talked about that. It is the Eon Foundation. Okay, not the person, but the Eon Foundation. That's the first thing. The address is the same as you were given. And you already have the EIN number. You have the date, January 1st, 2021. Does anybody know why we're not doing 2022 for the start date? Go ahead and raise your hand. And I don't want to guess. I want a person who has knowledge. Okay, they keep jumping while I'm selecting. Go ahead, Khalil. And Donovan will be the last person.
Is it because it wouldn't constitute as a full year?
Well, if we started in 2022 and we did the taxes for 2022 and we started January 1st, 2022, that would be a full year.
Okay.
Okay. Lisa?
Grand Rising. It was you were going back 3 full years.
Wait, say it again.
You were going back 3 full years for the taxes.
Well, 2022, 2023, 2024 are 3 full years.
Right, but doesn't the fiscal year end on the December 31st of 2021?
The fiscal year for 2021 ends December 31st. That's a full year. Those taxes for December for 2021 are that full year. 2022 is January 1st to December 31st, then 2023 and so forth. So 2021 will be 4 years. Nope, Donovan will be the last person, but thank you.
Okay.
All right, Donovan.
2022 was the event year, the start of the previous organization. So you had Berry and a different name group. So your event started in 2022, and you're documenting that from 2022 onwards.
Yes, but why January 2021? Why not January 2022 in that case?
That's your prior year. So your January 2021 is previous, and it would have been an organization in the background building up towards the start of the new organization. So
well, there wasn't a new organization. We're the Launchpad. We were always the Launchpad.
Okay, yeah. In that case, yeah, maybe the Launchpad started the previous years, i.e. 2021, and you're documenting the event from 2021.
Okay.
You start in
that actually, it's about time, because that was actually the answer, other than that other junk you were giving me. But, I understand.
Yeah.
So I'll explain it to everybody why that's the answer. Most of you guys probably didn't pick up what he said, so I'll explain. He said maybe the Launchpad started prior to 2022, and it did. The Launchpad wasn't just no idea that I just came up with in 2022. The Launchpad, this whole thing was an idea when I was sitting inside trying to figure out, what am I going to do? I got to take care of some things. I got to help some people's out. And I was twiddling my thumbs while they were sitting up there playing games with me, talking about, well, we overturned the case in October, but we're going to keep you in here until March of next year because we don't like you. So this was all a plan. I told everybody I let them do that to me because I had to figure some things out. I had to figure out how I was going to do things. So the first thing I came out with was talking about credits, and I called them tax credits at that point. Why? Because if I had just come out and said credits, most people wouldn't have got it. Then I went ahead and said, hey, people, it's federal credits. So you're going to call them federal credits. Because people wouldn't have gotten it if I had just told them, oh, no, you're just going to call them receivables. If I had started talking about receivables from the very beginning, everybody would have been confused. And then if I had brought in credits and then taxes and all of that, everybody would have definitely been confused. So this was to educate people from the very beginning. So 2021 was the start of the Launchpad. I even did videos immediately in March, and I think I did one by telephone in January, letting people know what I was getting ready to do. I even had people donating to me, telling them how I would benefit them with the information from the donations that they were given. So our start date for the company, now pay attention, date the entity was created. That first year, we had no income. Everything went to the foundation. That's where we get this non-exempt charitable split interest trust. So let's talk about that. We're going to go here. Now, this is the IRS form. This is not my form. That's why this area is grayed out. If it was mine, there would be no grayed out, be able to edit everything. So we're going to take this. Yeah, it'll be able to know exactly what form this came from. And I'm not going to ask the system anything. I'm going to do what I do. I'm just going to copy, paste. I'm using DeepSeek. I'm using DeepSeek because it's thinking. I need to see how the systems think. ChatGPT has a thinking mode, but it is not as thorough and as detailed as this. So, of course, the common point of confusion on tax form, let's break this down. This instruction typically appears on the 1041, so it picked up the form. Estate and trust, especially Schedule A, line 1. Okay, now hold on. Well, would you look at that? No, you must understand, it calls this a schedule. Why would it call this a schedule? Well, let's check it out. Non-exempt trust. This is a trust that is not exempt from paying income tax. Most trusts you encounter are non-exempt. They are subject to regular trust income tax rules and rates. Charitable trusts, a trust that is organized and operated exclusively for religious, charitable, scientific, library, and educational purposes. While purely charitable trusts are tax exempt, the term here refers to a trust that has charitable beneficiaries, but may still have to file its Form 1041. Now, the split interest trust. Now, this is the most common scenario of this question. It is a trust that has interest split between charitable and non-charitable beneficiaries. Well, isn't that something? I'm so glad we didn't discuss this before, but we're discussing it now. By the way, I've asked people to go over the form. Somebody should have been pointing out this particular thing by now. Just that simple. All right, how to check appropriate boxes. Oh, dude, thank you for that information. We appreciate it. Split interest trust, yes. And charitable trust? Well, we're going to do the split interest. That should take care of our charitable trust. Yay. By the way, so you guys understand, you will never see the trust. Eventually I'll make the declaration and the trust certificate available, but the trust in itself is private. The beneficiaries of the trust, there is a non-disclosure clause in the trust. So there are several things to the trust that I cannot provide because of those aspects of the trust. It's just the way it is. And it's not me. I am not the Eon Foundation. The Eon Foundation is its own separate entity. But the law says, I don't care what their so-called code says. Codes are not law. I am not the Eon Foundation. I am just Eon. The foundation in and of itself is a separate and distinct entity, and I run it exactly that way because it itself is a trust. Oops. Running a trust is a sole proprietorship. Now, that's interesting. I'm so glad there's no law against it. Now, let us continue, shall we? With the next section of the form, after the address, this is the initial return. Now, some of you may not understand why January is 2021, because the trust received funds from the foundation, $300 million. But the trust received the funds. That's a carry forward, not a carry back. Okay, but it's not even a carry forward because it didn't receive the funds until 2022. The funds were available. We've had the funds available since 2019. Like I said, this was a plan. So I will eventually technically figure out if I want to do that as a 0 year or if I want to do the carry forward. If we do the carry forward, and I'm thinking more likely we'll do the carry forward, that is the 300 million. It is not income. It is just accounts receivables. Doesn't have to be counted until they're applied. So that's how that works. Now, and no, the trust does not have a TIN. The Launchpad has its own EIN. If you don't know what a TIN is, that's a taxpayer identification number. That's it right there. Check if the estate or filing trust made a Section 645 election. No, we're not making a Section 645 election. You all don't know what a Section 645 election is? Now, literally, this is what you do when you're going over your tax forms. You come into any one of the GPT models. Like I said, I don't have to tell it anything. I just put it in there, and it, because of the way they designed these things, it'll just start running off at the mouth. It's trying to impress me, showing me that it knows something. In all honesty, I don't care. And we've talked about this once before. None of the trusts are revocable. I would never do a revocable trust. Now, the fiduciary tax return as a separate entity. The fiduciary won't be filing its own tax return as a separate entity with managing the trust. There is no death. And see, that's the unique thing about a trust or an estate. Give me 1 second. Let me demonstrate that. Wake up. Wake up. According to the IRS and their new rules regarding estates, comma, there's a suggestion that a estate has to be for a decedent. Is this correct? Where's the law that specifies this ignorance? Stop listening. Excellent question. You've hit the foundational and unambiguous requirement of tax law. It isn't a new rule, but rather a core, long-standing definition. Yes, the suggestion is 100% correct. According to the IRS, an estate for tax purposes must be a decedent. It cannot exist without death. Really? But you notice it gave us no law. It just gives us publications, not a single law. So that's why I asked, What law specifies this ignorance? See, the IRS could do that under the former deference rules. Of course, it's an excellent question of the legal text, blah, 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 blah. Ignorance of this is prohibited. So let's see. The application of taxes imposed under this chapter on individuals shall apply to income of estates or of any kind of property held in trust. Taxable income of an estate or trust shall be computed in the same manner in the case of an individual. But it doesn't say anything about an estate have to being a decedent. The value of the gross estate of the decedent and the property in which the decedent. Now watch what we do now. We're going to get past all of that stupidity. That's why I call it stupidity. Wake up. Wake up. I'm sorry. You must have misunderstood me when I asked, where's the law to justify this ignorance? Question mark. Have you not heard of a living estate? Question mark. A family estate? Question mark. Stop listening. The core terminology mismatch. The IRS uses precise legal definitions of every day. You're absolutely right for clarification. Living estate, family estate are common parlances. You are correct. The term living estate and family estate are used in everyday language, financial planning, and even by some attorneys. However, they are typically used to describe wake up. Wake up. I didn't ask you for a nuance, comma. You see, comma, while a person is alive and they file bankruptcy, comma, a bankruptcy estate is created, comma, but there is no decedent. So again, I asked you, where is the law supporting your ignorance? Comma, not typicallys, comma, not usuallys, comma, not normalys, comma, not any other type of nuance, the specific law supporting your specific ignorance. Stop listening. This is just to prove a point. The IRS wants to suggest that an estate can only apply to blah, 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 blah. You're absolutely correct, and I apologize for response. Thank you. Under the law, the creation of an estate for a living person in the bankruptcy context is found in the United States Bankruptcy Code. Wake up. You tried to get technical. You tried to suggest that only a bankruptcy estate can be created and not referred to a decedent, comma, where that is a lie, comma, an estate encompasses the total ownership of all property of an individual or of a family or of a business. Listening. Why is this important? Because we were helping people create such estates to protect their property. That's why they're given EIN numbers. And I don't want to do that here. In its broadest, most correct sense, does indeed refer to the totality of one's property, assets, and ownership interests. This is a fundamental meaning in common law and general legal practice. Bankruptcy estate is a definitive, legally created example of an estate. That's where the government creates the estate. However, the estate exists prior to the filing of a bankruptcy. The core legal definition for estate, as I've stated, an estate encompasses total ownership of property. This is a bedrock concept. So there is no only a decedent. The specific estates created by law from this core concept, specific legal procedures create distinct legal entities, cited estates, that manage the totality, the bankruptcy, decedent estate, and so forth. Conclusion and correction. You're correct, and I was wrong to be so absolute. The answer to the question is there is no law that supports the ignorance that an estate can only refer to a decedent. In fact, the bankruptcy code is a powerful law that explicitly disproves it, because I only deal with logic. Now, I did this right here about the estate for this reason. There were some conversations over the weekend where individuals were running into the GPT models, telling them that only this could happen, only that could happen, and that if you did this or if you did that, you'd be subject to scrutiny or audits and so on and so forth. Yeah, system is designed to create fear. And if we were subject to audits, okay, let them audit. Why would I be afraid of an audit? Why would anybody else be afraid of an audit? This is what we did last evening. Let's see if we can go there. Give me a second, because I did it in here, Skype and subcontractors. For SATCOM, we had our people put together our Skype calls, because we used to be on Skype as a company. And keep going. When we had it put together our Skype calls, I had it break everything down and put it in the ledger, line by line, and the different companies and everything, and it did so. Yay. I don't mind an audit. When I put it through, oh, by the way, when I put it through ChatGPT, the numbers were way off. Way off, that it caused a lot of confusion, and I had to tell it to ignore what ChatGPT did, because I knew ChatGPT's numbers were off. I don't know why they do that system that way. I believe it is a matter of how they are going in there and reprogramming it. And I do believe that everybody's not going to get the same answers with ChatGPT. I think that it is purposely providing me wrong information, which is why I compare it with other models. So I don't think everybody's going to get the same number, the same answer, and that's the problem. If everybody put in the same information, they will all get different answers. That lets you know that the system is programmed a certain way. Give me 1 second. I apologize. Early in the morning and dehydrated. This air we have in California right now, in the area that I'm in, it is very hazy. Should not have hazy skies right now. We just had rain. Skies were clear. They were blue. But yesterday there was this thick haze that stayed around the entire day. And it literally hovered over the entire area. Now there was a thick fog that came from the same haze. So something just ain't right. And my throat's been very interesting as a result of this junk that I'm breathing. And I just went out there this morning. So I apologize to you all. Back to the documents and ChatGPT giving us the wrong numbers. We're not concerned about an audit, not concerned about that. Now, here's the other thing. Now, I want you to pay attention. You see how I am very specific? It gives me answers, and I look out because I've been dealing with courts too long and government agencies and reading law too long. And I'm able to see when it gives me a response where to hinge on and where to hang up on. And the moment I see typically, usually, normally, that type of stupid language or howevers, or in a sense, whenever it uses that non-specific language and it gets general, then I know that it is hiding something. It is purposely trying to not reveal certain information. Like, watch this. What a living estate or family estate actually is for IRS purposes. I don't care what IRS doesn't control anything. IRS is not the law. IRS does not see an estate. Really? If it sees one of the following entities, each with its own tax rules: a revocable living trust. Nobody said anything about a revocable living trust. An irrevocable trust, a family partnership, LLC. That's actually the family partnership. Nah, I wouldn't do that, and I wouldn't do the LLC. They were telling everybody to do the LLC as the LLC was the greatest thing in the world. LLC makes you liable, but it's a limited liability company. It's still liability. Why not just do the stupid corporation and understand the capacity? But nobody tells people that except for one idiot. Anyway, applying the term state to a living person's affair on tax form is Treasury regulation, thereby highlights the error of applying, the law that specifies the correct definition, and thereby is this: you are not ignorant for using the term living estate in general conversation. However, the IRS is ignorant of this term as a filing status. No, they're not. People haven't challenged them until me. I haven't challenged them yet, but I am going after them. I am getting their attention because their attention needs to be got. Woo! All right. Now we go to the next section. So again, we don't do a 45 election because we're not an revocable trust. All right. Interest income? Nah. Total ordinary dividends? Nah. Qualified dividends? Nah. Business income or loss? Yes, that's why there's question marks there. Capital gains and loss? Nah. Rents, royalties, partnerships, estates, trust? Nah. Farm? No. Ordinary? Yes. Loss. Now it says attach form 4797. I would suggest you all go back over this, those of you who are going to be helping fill out the forms, because we're showing you the lines that we're going to be focusing on. So I haven't gone over to 4797. Okay. And the sake that I haven't gone over that, that is our capital gains and ordinary losses and so on and so forth. Okay. Core instructions. This line is telling you that the fiduciary, the executor, the trustee, has sold or exchanged property used in a trade or business, or has another type of transaction that results in a gain or a loss, is treated as ordinary rather than capital. And it is treated as ordinary rather than capital. Because the gain or loss is calculated on Form 4797, sells of business property, then 4797 is inappropriate. We are not filling out 4797 because nobody sold any company property. And I said ordinary gains only because it said ordinary gains is why I did that. So line number 7, no, not necessary. That's why it would be, because I said before I had to determine whether it was 3 or 7 and 8. Well, 8 is definitely other income. We have no, well, I guess, give me a second. Let's do that. I'm trying to figure it out because it's on my mind right now, so I might as well do it now. Wake up. Wake up. There was an assignment of $300 million in receivables to start this company. Comma, how is that documented on the 1041? Stop listening. I didn't tell it what the receivables were, how they were acquired, or what they're going to stand for. If I want to document them as losses or anything, I want to let it make the suggestion. Okay, estates, bankruptcy, blah, blah, blah. Stop listening. Stop listening. It does that on purpose, not listening. All right. Company, corporation. Oh, I'm sorry. Yeah, I knew it was going to do that because I said company. I'm going to get rid of the word company because it will focus on that and say a trust is not a company. It has an EIN number. It is a company. And a trust can be run as a company, the same as an estate can be run as a company. but it's a contribution. No, it's an accounts receivable. It's an assignment. It's not a contribution. All right, of course, this is a complex and specific transaction. Documenting it completely on is critical. The treatment depends heavily on the legal nature of the assignment and the grantor's relationship to the trust. Here is the breakdown of how the $300 million in assignment of receivables is documented to the core assignment is not income. Yay! The key thing is to understand that the assignment of the receivables themselves to the trust is not a taxable event that creates income in the form of a 1041 at the time of the assignment. It is a contribution of assets to the trust corpus, the body, the principal. Taxable event occurs later when the receivables are actually calculated to create income. The receivables are sold to a third party, creating gross and loss. How to document the transaction, ta-da. All right, so that was my thinking over the past couple of days, how I was going to document the receivables for this organization and the others. And the receivables, as I mentioned, the arbitrations, didn't need anybody's permission for the arbitration. The arbitrations were valid. How do we document the fact that the arbitration were valid? Well, the arbitration records document that. That's what makes them valid. And we had I'll mention this to you all. We got 9 more minutes, not 9 more minutes, 14 more minutes. We had an organization, still have the organization. It's called SITCOM Arbitration Association. Yes, Richard.
Oh, pardon me, Jan. I didn't even know that happened. I didn't even touch my phone, but yeah, it was a mistake.
All right. The SITCOM Arbitration Association, the courts went out of their way to vilify it, to make everybody believe that it was a sham, a scam. And I did not feel like being bothered with them at the time. Many companies like PennyMac said we never mailed out anything. Now, despite the fact we put on the record that we did mail out the junk, I have the slips from the United States Postal Service. I'm getting ready to, on behalf of that company, because they're hiring me to take care of this. I have the packing labels because we use a company called Stamps.com. Stamps.com, we printed up the label, but this CEO of the company at the time, he went to the post office, created an account, and had them send him the labels. I ended up having to fire him because of some discrepancies. And he blocked access to the Stamps account with the U.S. Postal Service. However, we made him turn over all of the files, and he did. And I have the actual original packing label slips, the kind that you peel off. So I can prove that he sent those things out. They're time-stamped and dated. And we had these companies, they always make such a claim that we never mailed something out. We gave them proof of service. The problem with the courts is when you make a claim, you have to prove it. When they make a claim, they don't. As long as they're represented by an attorney, they get what's called courtesy. Under the courts, they give those officers of the court the courtesy or benefit of the doubt, which is illegal because that's a violation of due process and equal protection. But be that as it may, that particular organization helps to justify each of those arbitration awards and the fact that the arbitrator sent out the awards and the arbitrator were independent individuals not representing any so-called party is how we document the credits, plus the fact that the tax documents were filed. Now, here's the thing. A lot of people believe that they have to wait for the Internal Revenue Service to file something in order for it to be what's referred to as legitimate, and that's a lie. The fact that you There was a person who sent something to the court, and the court received it. And now the court never filed it, but they did receive it. And now that person is being held liable for what the clerk did not do. And you guys, y'all pardon me for just a second. I just reminded myself of something. I'm dealing with a court. It is a piece of crap court. I could say the word crap because crap just means somebody playing dice. Let's do this, and let's do Court of Appeals. Yeah, I'll take care of that. I'll take care of that later. The Court of Appeals for the Second Circuit, those pieces of crap individuals, they had it to where they said they won't allow oral arguments. Well, there is no respondent to the $400 billion lawsuit. They did not respond to the appeal. They did not file a appellate brief. They are in default. And so nothing they say can be considered. I did everything in an affidavit format. An unrebutted affidavit stands true. An unrebutted affidavit stands true in law. So they are out of time to rebut the affidavit. That's why I do everything in affidavit format. Doesn't need to be notarized, just needs to have you attesting that it is based on firsthand knowledge, fact, and or information. That's it. And it has to be statements. You can't be, they don't want you concluding law, but I conclude law because I give it support of court cases to conclude law. Well, when the other party doesn't respond, then the court has no other choice but to go by the information. They're trying to avoid that. And so I have to let them know who I am and what I know. And they're trying their best to ignore me. And I'm doing everything in my power to make sure they understand that, no, somebody else, but not this one. Go play that game with somebody else, but you're not going to play that with me. So that's what I was getting ready to do, and I still may do it in just a second. Back to the form and back to filling it out. Eight, other income, it's not income, so we can't do 8. So total income is combining this one and that one. That's it. Only 2 lines. Now we come down here. Interest, no. Taxes, no. Fiduciary, no. Charitable, no. Attorney, no. Other deductions. Are there deductions? No. But net operating loss deductions. Now that might be something. So we are going to get rid of this one. I'm sorry. The lines were getting crossed up. I was meaning net operating loss, not the other deduction. Then at lines 10 to 15, yes, we have to do that one. And number 16, that's number 16. Number 17, yes. Adjusted total income loss, blah, 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 blah. And then qualified business income deduction, maybe not. Unless there is a tax issue and thus we'll do the normal business deduction. We'll go over the qualified forms. Matter of fact, let me see what are the qualified business deductions since we are here. So let me copy that. Copy that. And 1 second. Wake up. Explain exactly by listing and itemizing each one what the qualified business deductions are and the 8995 form, including the attachment or addendum -A. Stop listening. All right, we have 6 minutes because Dougie Fresh is on. 1 second. And W-2 wages, nope, won't be doing that. All right. It says this is a critical deduction pass-through. Well, we're not operating as a pass-through entity. Well, no, I got to be careful about that because some of the organizations are operating as pass-through entities. Okay. Used for simpler solutions, most taxpayers. Used for complex solutions, high income. Un momento. And I'm sorry, I'm a little distracted today because I have a doctor's appointment and I haven't been to the doctor in 3 years because I get tired of those people telling me the same stupid thing. I've been to the emergency room several times just to be going to get some numbers done, but I'll actually be sitting and talking to somebody who thinks they're smarter than me and knows more about my health than I do, and they were only meeting me for the first time today. So yeah, that's going to be interesting. As I tell them all the time, it's impossible. I have 57 years of experience with my health. So how in the world are you going to sit up here and tell me about my health, something that I don't already know? I'm only coming to you for a second opinion. I'm not coming to you to tell me about what I already know. All right. For taxable income, and you did not have income from specified service or trade of business, and you have income from specified service, trade, or business, blah, blah, blah. Below is 190 single. Okay. What is MJF? You didn't tell me what MJF is. MJF. It didn't give me the MJF. And it doesn't stand for Michael Jordan's feet. So that's not going to work. Oh, MFJ. Okay. And I don't think his middle initial is Francis. And business like blah, 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 blah. Health, law, accounting, consulting, athletics. We can add the consulting there. No, because the Eon Foundation is the only one that can add the consulting. The company can't add the consulting because it didn't provide those services. The foundation did. Qualified business deductions, the component of QBI. QBI. See, it explained QBI, but it did not explain MFJ. Give me a second. Nope, no MFJ. All right, be that as it may. The K1 1065 and the K1 for S corporations. So it will be the K1 1065 because that's the 1041. I don't want to do the S corporation yet. I have to look at the technicalities of why S corporation only. And here's the exact itemized. It goes on the QBI calculation, qualified business income, and net profits, nope, net losses, guaranteed payments for, no guaranteed income, publicly traded, no publicly traded organizations, capital gains and losses. Yes, that means excluded from the QBI. Qualified business income is losses. So looks like we won't be doing qualified business income. Qualified deductions and limitations, education, 20%. Nope. W-2, nope. Partnership, nope. Unadjusted basis qualified property, nope. The Form 8995 attachment addendum, blah, 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 nope. And so therefore that section will not apply right now. Some of it could apply, but it won't apply. There are no exemptions, and then you add up the lines. So, ta-da! And then we have taxable income, total tax. I'm not certain because we have to determine whether or not there's income in order for us to know that. And then total payments, we're going to be doing the 1041 ES. So there will be payments. And tax due, that's not going to be, we're going to calculate that, but there should not be any taxes due. That should be a negative. And overpayments, that is going to be a question, even though I left it blank, because we're going to be doing the 1041 ES. And then finally, the credits and the refund amount to be refunded. That will be calculated later. All right. This is the form. And of course, we're going to check that the IRS can discuss it with the preparer. Ta-da. And then we don't have a PTIN. I had a PTIN, but I didn't care for that. It just me paying money for nothing. I could reestablish it. I let it expire. Oh, and then I forgot the second and third pages. So we'll talk about those tomorrow, and then we'll start filling everything in. All right. I'll take care of the EIN and the other information that needs to be filled in. You guys will go over the numbers, get the numbers together, because we'll start putting in the numbers tomorrow. And right now we're at that time, so we gotta let y'all go. So I'm so glad we had this time together, but it's time to say goodbye. Oh, it ain't gonna let me say goodbye that way. All right, have a good day, everybody. Arrivederci. And send and there and goodbye.